And I am gonna text Jose Sauno. Are you here on the call? Let me just text Jose 1 second.
All right, so
Because Jose, he's gonna be the lender that's gonna be sharing a couple of things for us. And if not, I have the content too in my, like I know about all of this stuff, but I wanted you guys to hear from a lender. So we'll get started, and then he's gonna be joining us soon. So guys, my name is Diego. I am a dreamer. I am a DACA recipient, like all of us here, and I've been very excited to hear the news for that we just had, like effective on Wednesday. Effective Wednesday, we have the ability to apply for FHA loans. Now, there is a difference between conventional and FHA loans, and that's what we're going to be going over here to find out which loans is going to be better for you, because a lot of people think that you need 20% to buy a home, or then there's like different types of loan programs, and some people, because they don't have the right education, that's why they don't take action towards being able to buy a home. So while Jose Sano joins us here, I'm just going to share a little bit about myself for like 2 minutes so that you guys get to know me and get to hear a little bit about like why I'm doing this. Because I bet you a lot of you guys can relate to this. So my name is Diego. I am a DACA recipient. I live in Austin, Texas. I got DACA in 2013. Before that, so I was 22 years old when that was announced. I always remember like where I was when I read about it. And so I graduated from Florida State University. I went to, right as I was graduating, that's when Obama passes DACA. I get a job and I moved to Austin, Texas to work for General Motors. From there, I got the bug to learn about real estate. I became a realtor, and then and also a real estate investor. So I own around 22 properties, 20 I own around 20 properties around the United States. Some are in Austin, some are in Tennessee, where I do Airbnb, and some are in Florida. And but my full-time job is being a realtor. And what happened was when Donald Trump tried to terminate the DACA program, that's when I began to share my story. It went a little bit viral, and it got me on Forbes, CNN Money. I've done a TEDx talk, but it all came about by sharing that we DACA recipients, that we do pay taxes, we provide to this country, we provide to our communities. And I shared that as a 26-year-old, I paid over $28,000 in taxes, and I own 8 properties and employ Americans. So after that went viral, I got a lot of dreamers that reached out, and they're like, Diego, how were you able to do this? I want to learn. So that's when I created Home for Dreamers. So because I was getting pinged by a lot of people, like a lot of messages, and which was awesome. And I'm always happy to help the DACA community, the immigrant community. So that's why I put this here tonight, just so that we can all get the right education, and then go from there, because I'm very happy to help the community. And I've learned from my mentors, I've learned from other people, and then I just do this to give back. So very excited there. So now to the real thing, now that you guys know a little bit about me. Yeah, and then Jose, are you good? Let me unmute you really quick, and then I'm gonna make you co-host so that you can share and you can talk. Can you unmute yourself, Jose? I just want to see that we're good.
Can you hear me okay?
Now I can hear you.
Okay, cool.
Okay, cool. And all right, guys. So today, the main call again for today is gonna be to just go over the 2 different types of loan programs that DACA recipients can qualify for. before the Trump administration went into power, we could get FHA and conventional loans. And of course, it was a little bit hard anyway to get loans because not many lenders knew what DACA was. So it was a lot about informing them, letting them know that, hey, we don't have a green card. We are not citizens. We may have, we're just creating our credit. We just have our social that we just got. So it was a lot about educating. And then while that was going on, then FHA said, no, you cannot get loans, but now we can. And between Jose and I, that's what we're going to be sharing with you guys today. So Jose, can you please introduce yourself and we'll go from there.
Absolutely. Hi, everyone. Hope you're doing okay. Enjoying your weekend. My name is Jose Sauno. I've been helping out Diego Corzo, obviously, with the DACA recipients that are looking out to get the finance to purchase their first home and so on. And so we've been helping out a lot of DACA recipients through all these months. So I think it's been more than a year, right, Diego, if I'm not mistaken?
Yeah, it's been since 2018.
Correct. And so
2019. Yeah.
there you go. And so we've been helping out a lot of DACA recipients finance the conventional loans with New American Funding. I am a mortgage loan consultant and I work for New American Funding. I've been in the industry since 2005. So this February is going to be, I want to say 15 years. Anyways, the great thing about now being able to help DACA recipients with an FHA loan is that we are just going to have more options, right? So there are some DACA recipients that maybe they have a little bit of setback on their credit, or they haven't been able to establish credit, and they probably have like about maybe 2 or 3 trade lines that are relatively new, and their FICO scores are maybe below 620. So now with the FHA loan, we are going to be able to help them out with that criteria. So it just opens the door for more possibilities. You know what I mean? The other thing with the FHA loan is the debt to income ratios. They get pushed up a little bit higher than the conventional loans. On the conventional loans, I have been experiencing that if you have a great FICO scores and you have trade lines that have been established for more than 3 years as a DACA recipient, you can easily buy the property with a 3% down payment, and you can be able to get into that house. But if your FICO is maybe in the 680s, 670s, sometimes on the conventional loan, it will ask you to put more down payment, right, as a compensating factor for short reserves. And so then you start getting into those nuances about maybe showing compensating factors so they can get the loan approval. And it becomes a little bit more of a tedious process with the conventional loan. The MI, which is the private mortgage insurance, when you are financing more than 80% of the value of the property on the conventional loan, if your FICO score is lower than 700, that private mortgage insurance is really high. So now with the FHA loan, we're going to be able to see, okay, what's going to be better for this borrower at this time, right? Because both programs are great, but being able to have more options on the table for DACA recipients, I think it's an amazing thing, because now we can show them, here's the difference with the FHA loan. You can get an FHA loan with as little as 3.5% down payment. The private mortgage insurance, if your FICO score is below 700, is not going to be as high as the conventional loan. So we can already anticipate, okay, you know what, this borrower is going to be maybe better off with this program, and all we're going to do is present it to them. But I'm excited that this FHA loan is going to open more opportunities and the possibilities for somebody to get into the house now versus waiting for them to fix their credit. It's going to be there. That's amazing. That's awesome. Go ahead. I don't want to be taking too much of your time. I wanted to tap into the debt to income ratios too, but I'll do it briefly. With the conventional loan, sometimes we can push those ratios up to 50%, right? Of,
And Jose, what is the debt to income ratio? What does that mean?
okay, so the debt to income ratio, guys, for someone that obviously out there is wondering, okay, what is that? What is that about, right? It's basically the income that someone is generating, right, per year. We look at that income, we take a look at what would that income be for month versus the debt that you carry or your liabilities that you pay every month. Say, for example, if your liabilities right now are like about $300 a month, that's your car payment, maybe a couple of credit cards, and that's what you're paying every month. Now, when you're applying for a mortgage, you're gonna have an extra liability, right? That's gonna be another payment. So say, for example, if with the mortgage payment that you're gonna get, your liabilities are gonna be, I'm just gonna make up numbers, 2,500. And if your income that you're making per month, we're talking about the gross income, that's $5,000 a month, you are a 50% debt to income ratio, meaning that you're making twice as much as the money that is going out every month, right? So with the conventional loan, are you there, Diego? Okay, with the conventional loan, we can push those ratios up to 50% when the FICOs are over 700, when the borrowers have compensating factors and they're putting 3% down payment. Sometimes they have to put 5% if their credit is deemed. What I mean by saying credit deemed is like if they only have like maybe a couple of credit cards that they've been established maybe for about a year and a half, right? Now we use the down payment as compensating factor. So we say, okay, let's try it with 5%. Sometimes that works, pushing the ratios over the, pushing the ratios up to 50%. But sometimes it doesn't. Sometimes it restricts you to bring the ratios up to 45% on the conventional loan. And so that's where the tricky part happens with the conventional loans, where when your credit is not up there and maybe you need more time to build more credit. With the conventional, just to take it as a comparison so you can see what the benefit is going to be now, you can push those ratios up to 52% on the back ratio, which means when we add all of your accounts that you have in your mortgage payment, and 46% upfront, which means the mortgage payment, including taxes and insurance and MI that you're going to have, doesn't exceed 46%. So taking into consideration again the way we calculate the ratios is pretty simple. It's the income that you're making every month, gross income, versus the payments that are going out every month, and including obviously the new payment that you are going to get with the new mortgage. So the FHA will now allow those borrowers that maybe they were looking to finance a property, or they're looking to buy a property for $500,000, but because of the fact that the ratios maybe were restricting them at 45%, they were only to qualify for $400,000, as an example. Now with the FHA loan, we can run what's called the underwriting desktop analysis, and if it accepts the file up to 52% on the debt to income ratio, you're good. So now you can qualify for $500,000.
Cool. And just so that everybody knows who, like, as you're starting to want to buy a home, the main two people that you need in buying a home is going to be your realtor and the lender. And with us, I always recommend like a DACA friendly realtor that at least is aware about the program, that at least is aware about like our situation. And then on the lending side, you want to make sure that you work with somebody that understands what DACA means, so that, because there's some lenders that you can tell them, hey, I don't have a green card, I don't have a citizenship. And then a week before closing, they will ask you, hey, can you send me your green card? And I'm like, look, we don't have that. We only have our work authorization with C-33 and our work permit, and our driver's license and our social. So the first step in wanting to buy a home, making sure that you have the right team. Number two is getting qualified with a lender. And that's why I brought Jose here, because he's helped me. He has helped me with a lot of the DACA recipients that reach out to me, because I'm a realtor in Austin. And I always say, hey, I am just a realtor, but I can connect you with the right lenders. So in this case with Jose, he can help in 42, 46 states,
All states except
right?
for New York and Hawaii. New
And
American
Hawaii.
Funding is working on getting licensed in New York, but right now New American Funding is licensed in all states except for New York and Hawaii.
Okay. Okay, cool. So then what's going to happen is as you're getting your pre-approval to find out how much you can qualify for, just like Jose was saying, the process is that you're going to be able, you'll schedule a call with a lender. And then after you tell them a little bit about your situation, stuff like that, they're going to ask you to apply for a loan. As you go through that, they're also going, that's when you're going to let them know like your assets, how much cash you have in the banks, all of that stuff. Highly recommend that if you guys have bank like cash under the mattress, right? Debajo de la cama, like with your mom, la tía, la abuela, like everybody has some cash under the bed. You want to make sure that you deposit that money into the bank account so that it seasons. Because if the cash, like if you have $10,000 to buy a home and all of a sudden you pull it out of your couch and then you put it in the bank account, you're not going to be able to use that money, because the bank, the lender, doesn't have an idea of where that money came from. Even though maybe you got paid via check and then you take the cash, you deposit into the bank account and then you take the cash out. Still, you really have to know, like you have to leave the cash there. So it is super important that you do that. Also, when you're applying for the loan, always remember that you need to let the lender know, be as transparent as possible with all of your finances. I know that, for example, often we might help out like el primo, la prima, whatever, like, hey, let me just put the car as I will co-sign for you. And you might not know, like 3 years down the road when you're trying to buy a home, you forgot that in 2017 you co-signed for your brother or for your cousin. And then all of a sudden now that comes up in your credit and they're like, hey, you also have, like, you told me that you have this, you only have one car, but in your credit it also has like a Honda Civic and the payments are $150. So at that point, you'll need to show that another person is paying for certain documents. So just make sure that when you're just like with you or also with other dreamers, keep that in mind. Is super important to be aware of that, just so that there's no issues. Now, as it goes to the documents that are needed, Jose, you need your last 2 years tax returns. You need your last 2 pay stubs. You'll need your last 2 bank statements, the copy of your work authorization. They might need the previous cards too, or like the 797, which is those documents from immigration. Anything else, Jose?
So basically, yeah. So we need the last full month of pay stubs. So say, for example, if you get paid every week, we will ask for the last 4, right? If you get paid every month, we will just need the last one. If you get paid bi-weekly, we will ask for the last 2 pay stubs, most recent pay stubs. Now with people just waiting for the W-2s, I've been recommending people send me the very last pay stub you received in 2020 so I can look at the year to date, income, and then the 2019 W-2s. And as soon as the 2020 W-2 it's out, just send it to me. The taxes, we always ask for them, the 1040s for the past 2 years, just so we can see if maybe there's more income that we can use. A lot of the times, DACA recipients have a side gig, doing maybe some job on the side, and they report that income. That becomes what we call Schedule C. And if there is some extra income that we can use, as long as you've been reporting that income for the past 2 years, we can use it, and it plays to your advantage, right? If you're a DACA recipient, I've been running into a lot of entrepreneurs, DACA recipients that have multiple corporations, and this is of the the people that have been calling you, Diego, they call me and I find out they own their business. In that case, we will always ask for the S corp tax returns, the corporation last 2 years, including Schedule K1s and personals. So then we enter into a different kind of like analysis to look at the whole pie of their income. But if someone is just an employee, maybe getting W-2s, it's relatively simple. Just the W-2s, pay stubs, bank statements, last two bank statements, all pages. A lot of the borrowers sometimes they just send you a page or 2 pages. But the reason why we ask for all the pages up front is because precisely what Diego was talking about. We want to avoid any setbacks, because all of a sudden, if I see a big deposit on that bank statement and I see there is a $10,000 deposit here, even if it's 5,000, right, and it's cash, then I'm gonna ask them where this money came from. We need to source it, right? Because the banks always get audited by these entities, and we have to make sure we have all this paper trail to back up where the money came from and so on. So the best way you can do, if you have money sitting there in your house and it's your money, you probably cash it when you cash your check and you put it in your bank. Instead of putting it in the bank, you put it in your house. Have it in your bank and make sure that it's seasoned for the last 2 months, and then you should be fine. Or if, say, for example, your mom or your dad or somebody in your family could help you with gift money, and you have $10,000 in your bank account, but you deposit $10,000 cash, you're not going to be able to use it, right? Because you deposit that cash, you can't source it. But if mom says, I have my own money in my bank account, but it's seasoned, right? That money has been sitting there on her bank account, and she wants to help out, that's perfectly fine. We can use the gift funds so that, and then later on you can pay your mom if you want. But
now, Jose, that's a really good question. So guys, that is an extra, like, you can call it a hack to be able to find out how you can get money for that down payment, right? So you can save your money, but also there might be that opportunity where a parent, a family member can gift you money and it's tax-free up to like $14,000 or $15,000. And so if you get a gift of up to 15,000 or 1,500, I'm sorry, 15,000, then and if it can be sourced. Now, Jose, since I have you here, because I had this question in the past. If the mom or the parents, let's say they only have ITIN and they do have a bank account with their ITIN, can they still give gifts, or does it have to be
absolutely.
an American? Oh, okay,
No,
they can.
Absolutely. That's a great question, because a lot of the times there's a lot of confusion on regards to that. Mom and dad, regardless of the status, all they need to do is just fill out this paper that we sent to them, and it's like this like one page that pretty much states, the relationship of the donor, mom, dad, brother, sister, or sibling, and the amount of gift that they're gonna donate, the account number where those funds are sitting, and the name of the institution. Now, here's the kicker, and here's the good part about this, and you might want to make a note of this. If you are financing a conventional loan, you're better off just, if you're going to use gift money, you're better off just telling mom or dad not to transfer any funds into your account, right? And what they're going to have to do, they're going to have to wire the funds that they said they were going to be giving you as a gift directly into the title or escrow company at the time that you are closing your deal. Because if those funds don't touch your account as a borrower, then the underwriters on a conventional loan, they don't have to ask you for the donor's bank statements. A lot of the times when the underwriters ask for, and that's only on the conventional loan. FHA, the donors have to disclose their bank statements. That's because FHA have different guidelines. But a lot of the times, because of the donors, sometimes they don't feel comfortable about explaining their things on their bank accounts or showing their financials to third parties. We want to make sure that we make life easier for them because they're already helping you, right? So, but that's one of the takeaways that you can take from this. It's a lot of the times, a lot of escrows fall out of escrow because of that, because they don't They didn't know that, and all of a sudden the mom transfers funds from her account into the borrower's account, and then the underwriters ask for the bank statements from the mom. All of a sudden, the mom also has a big cash deposit that can be sourced, and maybe she had 7,000 there that was sourceable, but the rest is not, and we can't close the loan because they didn't have enough funds, because the underwriter will say, I can't use the funds that can't be sourced, right? So
Yeah.
those are,
Um, and everybody here, I'm gonna get to all of your questions here, but since we're on this topic, Lisa has a question. What if she has a joint bank account with her parents? Can that money that's being used be tax-free even if it exceeds the 15,000?
that's a great question. So if you have a joint account with the parents, hear me out. If obviously everything that you've been depositing there is sourceable, it's payroll, right? And there's no cash deposits that we have to worry about. We're gonna ask you to source them. If you can, if you can use those funds, obviously. The only thing that the borrower will have to do is provide a letter of explanation stating that the borrower has 100% access to that account. So in other words, the mom will have to write this letter, type it, or to be honest with you, I sometimes ask the borrowers, okay, just explain it to me. So I make things easier for them. Oh, that's my mom's account. Okay, do you have 100% access on that? Okay, yes, I do. Let me type it for you. I'll send it to you. This is based on your words, obviously. I'll send it to you, print it, have your mom sign it, and send it back. And basically, the letter will state that the daughter has 100% access to that account, which means then we don't have to get a gift letter, because in other words, that money is also hers. You know what I mean?
All right,
So
that's
we don't treat
smart.
it as gift because it's a
I
joint
like that.
account, you know?
Yeah,
So
yeah,
then all we need is a letter of explanation from the other party on that account saying that the applicant has 100% access to that account.
yeah.
The other thing we run across um, a lot of DACA recipients will ask me, hey, my dad really makes good income. He wants to be on the loan. And because obviously he can qualify easily with his income and his credit is great. But the only difference is that he's been building credit with the ITIN number, right? So because of we also, there are ITIN loans, right, that we can generate. But we don't want to mix the programs, because one program is for DACA recipients, the other program is for ITIN holders, right? So if you can get a DACA loan, it's going to be way better than an ITIN loan, because the ITIN loan, the rates are way higher than DACA loans.
And Jose, can you do ITIN loans too?
We do
New
ITIN
American
loans.
Funding.
Yeah,
You do? Okay.
New American Funding use the broker channel, because we're licensed to use the broker channel and accommodate those borrowers with the banks that are financing ITIN loans, which we have multiple banks, right, that we can source them out to.
Okay.
But we, as New American Funding, we don't finance them. We take them out through the broker channel. Yeah.
Okay. Got it. So then the question that Lisa had regarding the joint bank account, just as a follow-up, she's asking, does it matter if we've never used the money, even though we have access? I don't think it matters, but
Yeah, that doesn't really matter.
it doesn't matter.
Yeah,
Yeah.
if your money's there, just sitting there, it's all good. Remember, the only time the underwriters will ask for you to explain anything showing up on your bank accounts. Here's the thing: they will question any cash deposits that can be sourced, right? If they see a cash deposit, they will ask, okay, I just need to have some paper trail and show me where those funds came from. I have in the past, to be honest with you, and it's almost impossible to what should we call it? To get the underwriter to understand where the money came from. But I had in the past been able to win a couple of situations in that case, right, where the borrower actually had all this, it was like all this equipment from a restaurant in a storage, right? Because they closed their business. He had commercial refrigerators and things of that nature, right? So that stay in the storage, right? And the borrower will, all of a sudden say, I'm gonna sell this out, right, to somebody, so that I can, what should we call it? I can use those funds for the down payment. And um, back in the days, remember when we were getting um, out of the bad economy in 2009, right? So it happened to be around that time that the business were of that person was not doing good, and then the level of explanation that he put in together, it all makes sense because they had to close the business. He put that stuff in a storage, and he kept the receipts though of all that stuff. The only thing he didn't have as means to prove where the money came from is a check, because the person who bought the items, it was all cash. But we were able to, um, at the underwriting discretion, being able to convey the logic, right? So they connected. That's okay, makes sense. But you have to have a very good argument or explanation when that happens. But the majority
Yeah.
of the time they will ask you for that. But if your money is in the bank and you haven't used it, that's not a problem. The other thing they will look for on the bank statements is if they see a recurring payment. A recurring payment, what it is a payment that is going out of your bank account every month for the same amount, right? And that recurring payment is not showing up on your credit report, the underwriter will question that right away. Why? Because they will say, wait a minute, there is a $200 payment coming out of this checking account. They must have another debt somewhere else. It's not showing on their credit, but I need to see what's going on here because they need to use that liability, on the ratios. And
Got it.
so that's one thing that you got to look out for.
Got it. Got it. No, thank you very much. These are great, really great tips, and also like the creativity to be able to source the files and all of that stuff. So, I'm just gonna scroll up here. There was, I think it was Leo who asked, if you're a recent grad, do you still need to show 2 years of pay stubs? And from like when I bought a home while I was working as a software developer, the lender just asked me, because it was like right after college, the lender asked me that if I can show my diplomas, if I can show the diploma, then I wouldn't need to show the last 2 years tax return if I didn't have it because I was a student. But you do have to show that you're working in the same field that you graduated. So for example, if you graduated with physics and then you're doing like archaeology or something like that, then at that point there might be an issue. But it's really important to note that as long as you have your work, like your employment letter and your pay stubs showing that you are like, they're going to call HR and all of that stuff. So they're going to confirm that you are an employee there, that you have a future there in that job, and you should be okay.
Correct. They'll ask you for the job offer letter. They'll ask you for a bachelor's degree, and if you had done some like internships, right, before you took maybe on that job full time, also include the contacts where they can call them and find out you were actually helping out maybe a company do some internships on regards to the
Yeah.
line of business.
Yeah. For Christian here who asks, what if parents are both undocumented? Does DACA recipient have to do everything alone? So you will have to put everything in your name, the debt, income ratio, everything of that will be on you. But your parents, if it can be sourced with the money in their bank account, they can give you a gift for the down payment. So, but everything will be on you, and you cannot have your dad be on title. Is that correct, Jose? Like your mom or your dad, they wouldn't be able to be on title. You can add them later, and that's what you
Correct.
can definitely do. You
Correct,
can
yeah.
buy a home, because like I've had a couple of DACA recipients have called me before, and they ask me, they tell me, look, I'm gonna buy this home, but I really want to gift it to my parents. What's a way around that? And that's when I tell them, you can buy it in your name, and then later just add them, and you can remove yourself if you really wanted
Correct.
to.
Yeah, that's one thing. One of the things that I come across a lot where they ask me, "Hey, can my dad be on title?" Yeah, they can be on title. So yeah, but it is recommended that you first get the loan, get everything out of the way, and then deal with that later on. Because a lot of the times you can try to add them on title too if you're going through the process by putting them on the contract. But it will depend on the notary that is notarizing the documents at the time you're finding, you're doing the final closing. So it's just recommended that you deal with that part later on. Yeah.
Yeah. Cool. Do we have a couple of more questions here? So if you do apply for a loan, they're going to do a hard inquiry in your credit, right, Jose?
Yes. So the way I work with the DACA recipients, I personally, and every loan officer works differently, right? It's just the nature of this industry. I normally try to streamline everything for my borrowers. I send them a hyperlink so they can fill out the information on their own. Once you fill up all the info about yourself and work and all that, the system I use, it automatically does a soft pull. So once I get the info from you, I would also get a soft pull of your credit report. And the soft pull doesn't hurt you, right? Your FICO score, but it allows me to see all the liabilities that you have on your credit, and it allows me to see one FICO score, which is normally the lowest or the middle. That being said, if I see that obviously your FICO is not where it needs to be at the time, and I see something that there's maybe a room for improvement on your credit, then I'll let you know. Okay, you know what? Before I do a hard pull, let's try to work in this area so we can bring up your FICO score where it needs to be and then help you, right? But if I see everything is looking good, obviously then I'll take the next step and then let him know before I hand out a pre-approval to you, because I have to run a tri-merge, which is a hard pull, because otherwise the underwriting desktop and analysis won't give me the results that I'm looking for, which is the DU approval. And that's very important on when you're buying a house. A lot of the times we come across with Diego DACA recipients calling him because they're falling out of escrow. And maybe the guy who was trying to help them out, or the person, they do DACA loans, but they didn't do their due diligence up front. And there are a lot of things that you have to look up front sometimes, little nuances like, gosh, I need to make sure I bring the debt to income ratios to this, to this number, or maybe I'll have you put more down payment, things of that nature. If you don't do that stuff up front, and then you're trying to deal with that through the close of escrow, and you already have a set, you already have a purchase price set because you're in escrow. You can't change that, right? So, but when we're working up front with everything, then we go back to the borrower and I tell them personally, I know you were looking for this price, but based on your scenario, this is how much you're going to be able to qualify for sure, right? So that you don't fall out of escrow.
Mm-hmm. Yeah, that's very important. And so what it means here too is that for us guys, we can qualify as of now for down payment, for low down payment programs, FHA 3.5%, or conventional loans 3 to 5% down. Now, I always recommend if you're buying a single family home, this is like a house, and you have good credit, I personally recommend using a conventional loan. The reason why is because there's the FHA loan. It's a little bit more expensive in regards to closing cost. The PMI, so the mortgage payment that you pay every single month is called the PITI, which is the principal, interest, taxes, and insurance. And then if you put less than 20%, which is what we're putting, you will also pay the PMI. Now, the PMI with an FHA loan, it will never go away unless you refinance the property. But with a conventional loan, it will go away after you can show that you have about 20 to 22% equity into the property. And so that will go away, and that will mean that your mortgage payments will be lower once you have built some equity. So highly recommend that. And for example, I'm in Austin and the market has been booming. So there is potential that I can get my PMI removed much faster, especially if you buy a home that may need, like, that you're going to do some renovations or whatever, and you're adding value to the property. You can ask your lender to, like, after 2 years, to do an appraisal and to see if they can remove the PMI. But you can only do that in conventional loans. So that's why it's super important to do that. The other thing that I wanted to cover, and then I'll continue answering here, is that, and Jose, with FHA loans now, and this is what got me like super excited, is I believe that now we can qualify to buy a duplex, triplex, or quadplex, correct?
Yeah, so the cool thing about FHA loans, and following up on what you were saying, FHA loans, it's not really a bad program, right? Conventional loans is not also a bad program, but we have to see at the time that you're applying, what are your intentions, right? What are you looking to accomplish by financing maybe an FHA versus a conventional? So we can give you the information that you're seeking, and then it will be your choice. But as Diego said, the conventional loan, it comes with private mortgage insurance, that it won't go away. You have to refinance at some point, and hopefully you have enough, value in your property to get rid of it at some point. But it also comes with another private mortgage insurance on top of the one that you pay every month. And it's 1.75% of the loan amount. We call it base loan amount on an FHA loan that you're financing. So as an example, if you're financing 100,000, just to take that as an example, 1.75%, what is that? It's like 1,700?
Yeah.
So imagine when you're financing 500,000, 1.75% is a significant amount of money that you tap into you tack into the loan amount that you're financing, because they allow you to finance it, but it's just, you're going to end up financing a higher loan amount, and it's still money that you're spending, right? The conventional loans, they don't have that. The cool thing about the FHA, so I don't go sideways, that Diego was mentioning, with the FHA loan, with 3.5%, now you can buy the 2-unit property or 3-unit property that you were looking to buy. With the conventional, you have to put 15% minimum down payment. And that's it if your FICO is over 700. So then it becomes a little bit tedious when your FICO is below 700, because now you have to put maybe 25%. You know what I mean? With the conventional. So the FHA loan, if your FICO is great, and you're looking to get 2 units or 3 units to maybe have mom and dad live on the other unit, and you marry, right? And so yeah, you can try to finance an FHA loan for a 2-unit or a 3-unit, right?
Yeah. And guys, I call that, if you guys have been following me online and stuff like that, I call that house hacking, which is basically the way that I got started. But which is what I did is I bought a home. I live in the master bedroom. I lived in the master, rented out the other 3 rooms. The rent payment from my roommates paid for my mortgage, right? But that was because I couldn't qualify for an FHA loan at the time. Now I would be able to buy a duplex, for example, putting 3.5% down, live on one side, rent out the other, and reduce my living expenses, and then be able to do other stuff with that money, which is something that America here, who's here. Hi, America. Thank you for joining. She has used the FHA loan in the past, and she lives, or like she Airbnbs now. So what's great about this, guys, and what gets me excited is that you can turn, instead of paying a mortgage payment, you can have other people pay for that, and then that becomes an asset, right? And if people begin to collect assets, that's how we also continue to create wealth. And I was talking with America last night, that this allows the Latinos, well, like all sorts of the DACA recipients, to be able to increase our wealth in this country as first generation immigrants here in the United States. So I'm a big proponent of that. I'm going to go back here to seeing a couple of questions. Yes, there was one here that, Jose, so let's say that I have a car loan in my name, but I also got my mom's car loan, but she's paying for it. So if you ask me, Diego, there's 2 car loans, we're going to ding you for 2 on this. I say, wait. if my mom's paying for it, can I show you 12 months of bank statements that show that she is paying for it from her bank account? Or how many months do I need to show that to you?
Sure, that's a great question, and that goes only not for car loans, guys. So if you had co-sign maybe for somebody else in the past for a mortgage too. So here are the things that the underwriters are going to ask for. They're going to ask for the copy of the note of the car or the mortgage, and you're going to have to show that account is a joint account, that it's you and the other person that you co-sign for on the loan. So once you know you have that, then you have to look also for 12 months of proof that you haven't been making that payment. So the underwriters will either ask for cancel checks. What a cancel check is, when you went to your bank account and you see once you check your checks are processed, it has a stamp showing you went through. That's a cancel check. So they will ask for 12 months cancel checks and to show that the other person is the one that actually is making the payment on that loan, or bank statements showing that that person is making the payment on that loan. But if one payment is missing, all of a sudden, this is important because when you're doing a call sign, you want to make sure that if you're doing a favor for somebody else, you want to tell them, hey, back me up, make sure you have every piece of paper trail later on showing that you're actually going to be making the payments. Don't go into the bank and say, I'm going to make this payment and just drop some cash, because then there's no way you can source where the money came from, and the underwriters will not take that. So if you have one payment that is missing, where you can show how the other person make the payment, the underwriters won't exclude that liability from your liabilities, and that could potentially, put you at a different purchase price than the one that you were looking for.
Yeah. Yeah. Now, there are some really good questions here, guys, and we're going to get to all of them. So one of the things too that that's important is so you can only have one FHA loan at a time, right, Jose?
Yes, there's an exception going on. Like if you live in the past and you finance one FHA loan, and you might be living in that house for, I don't know, 15 years, right? A long time. And you have a really good explanation as to why you are moving out of that property and financing another FHA loan, they might allow you to finance another one, but it's really hard.
But by that time, it makes more sense to just do a refinance to a regular conventional loan if you've been living there for many years. So, okay, cool. So then for sure, so let's just say those are extreme examples, but for sure, one at a time. So since I love teaching this stuff too on the creating wealth, one of the ways, if you guys do want to get creative, right, and be able to get 5 homes in the next 8 years, for example, here's the key thing. And this is how I did it, because a lot of people ask me, how did you do it and all of that? So you buy a house, putting 5% down, or let's say you do an FHA loan. You buy a duplex, live on one side, rent out the other. After a year or two, you can get a conventional loan if you wanted to live on another house, or if you are able to show 20% equity that you can refinance that duplex, you can qualify for another FHA loan. So you kept property number one, you refinance it into a conventional, and now you can get another FHA loan. And you can do that multiple times. It's easier a little bit with conventional loans because you can buy a house, live in there for 1 or 2 years, and move into the second one, putting 5% down again, and do it over and over again. So that's what I like teaching to people. And it's fun, and you only need to put down low down payment. And yeah, America, you raise your hand. I don't know if you have a question or you want to share something, because I know that you are doing this with
yeah, I just
duplex.
wanted to share that I'm there. So I wanted to just come on and say it's possible. If I did it, honestly, you guys can do it too. And I was so scared when I when I got the duplex in Atlanta, I was terrified. Like I remember like signing like a stack this big of papers and like literally like not knowing what I was signing, but I just knew I wanted to leave because it was so overwhelming. I remember like everybody showed up, you know, because there's certain people that have to be present to sign all the paperwork. And they were like, "Is it just you? Are we waiting for your husband?" And I was like, "No, it's just me." And it just I remember feeling like weird about it, like, oh my God, like maybe I shouldn't be doing this right now. Like I'm doing it backwards. Like I should get married first, like, and then do this with someone. Because it's hard to like imagine like what if things go like all these like nightmare scenarios will come like will hit you, right? Like, oh my God, what if this, what if that? And believe me, after you sign all the paperwork, they will still be there. Like if you don't have like 100 million doubts, like like it's not really real. Like it will happen, but just relax. Like everything will be okay. Like you will figure it out. And if you don't, then ask. Go online. Like I have to Google and at some point, like I have to call people to be like, I don't know what I'm doing. Help me. And the answers are out there. You just kind of have to like, it's worth it. It's worth the pain of like, you know, having to reach out to people. And it's not even a pain. It's like I reached out to people like Diego, and you know we have a friendship now, and now I know Jose, and so like your network will expand because you're seeking solutions, and when you're extending that your net of networking, your net of people, then I guess like you're expanding your realm of luck. You know, you get lucky, and you it just gets better. Going back to the duplex, like I'm at a point now where I've had it for more than 2 years now. And so I'm at a point where I have to refinance because I got an FHA loan. And so I would love to just get it refinanced so I don't have to pay like all the insurance premiums that add up so much money, and then get another FHA loan here in California because I live in California now, and the homes here are not like in Atlanta. So like there's no way I'll find one for 300,000, right? And so that's I'm in the process of doing that. But anyway, I just wanted to come on and say like it's worth it. You know, if we don't buy those homes, big corporations will own them. And you know, as Latinos, Latinas, like let's own land. You know, let's own property. And you know, you have the resources to help you. Don't be afraid. Don't be afraid to reach out and ask for help. Like reach out to me, go find me. I'm easy to find. America Arias. I want to help other people to do this because there's so much money. I Airbnb my place now in Atlanta. I tried living there because it's an FHA. They made me live there. Like I have to live there, and I thought it was like I had to like abide by the rules. And then eventually, like I just ended up not living there and renting out both sides of the duplex. Yeah, you're supposed to live there like a year, um, but no one came knocking. You know, I got away with it, but I tried. So I shouldn't give you guys that advice, but they never came to the house. So anyway, so I Airbnb both sides now. My first listing was for the Super Bowl. And I made literally that weekend, I made like $2,500 that weekend via Airbnb. So my mortgage was paid for like in one weekend. So either do that or rent it out or live there and then rent out the rooms. Like there's so many options. And you signed up to do this because you're curious about it and you're interested in it. And I was always like, you know, always wanted to do this. So the only way to learn is to just do it. You'll learn a lot. And again, like if you don't know something, you'll figure it out. You'll be fine. So anyway, I
Yeah.
just wanted to share that.
No, thank you very much, America, for
Yeah.
sharing, because it's
Yeah.
very, very inspiring for other people too, to be like, hey, if you can do it, why not me? You know?
Right.
So
Yeah.
it's good.
So thank you, Diego. Thank you, Jose, for creating this platform for everybody.
Oh, no worries. The other thing, before I forget, a lot of the times people don't realize when you buy a property, let's just say, even if it's a single family residence, and you're trying to buy another property, if you've been in the property for at least a year, sometimes even 6 months, but you have a legitimate reason why you want to maybe move, right? Maybe you want to expand or reduce, or you have a crazy neighbor that you can't stand anymore, and you wanna move and buy another property. We can use what's called departure rental income to try to help you qualify for the other property. So a lot of the times people don't know that, right? Because if you have a single family residence, and you're departing from that property, people think, oh, I'm not going to be able to qualify for the other house. But no, we can use 75% of the what the gross rental income is going for in that area as a departure rental income to offset only the mortgage payment. So say, for example, if you're not an investor that have maybe multiple houses renting out right now, you only have one, they'll allow you to use up to 75% or the figure that you need to use to offset the mortgage payment that you have. So if 75% was $3,000, but your mortgage payment is $2,000, they'll say, okay, you can only use $2,000, just so that mortgage payment doesn't get on the way to qualify for the other house. But when you have a house already that you've been renting out for more than a year, now you have experience. And if you want to do the same thing later on for the other property, now you can use up to 75% of the rental income of the property that you are departing from to qualify for the other property.
Yeah, that's awesome. That's awesome. And guys, so one, I'm just gonna look at these other types. So there was a question here from Jose. How do you remove the PMI once you have 20% equity? If it's a conventional loan, if you just pay the mortgage after like 7 or 9 years, it will go away by itself. But if not, after year 2 or 3. So what I would recommend is reach out to your realtor after 2 years and tell them to send you a CMA to see how much the property's value at now. You can also go on Zillow, but the best thing is going to be the realtor. If you looked at your mortgage payment to what it can sell for, you have 20% equity, then you would definitely be able to get that removed. You'll probably have to pay $200 to $500 for an appraisal. So make sure that you know that you can justify the 20%, because if not, you're going to pay $500 and you're not going to get that back if it says, hey, actually, you still need to build another 10K in equity. So make sure that you do it the smart way. Always recommend to ask your realtor about that. And then for everybody here too, if you guys do need a realtor, DACA friendly realtor in your area, let me know. I'm pretty well connected with between like the other mastermind groups that I belong to and other people that I've been able to connect with. So I'm more than happy to help. Then there are some questions here. How soon after you bought a home, a conventional loan, purchase a second home FHA? It has to be at least 1 year. There was a question here with credit. So she says, my credit is 738. I don't have a lot of savings. I help my brother-in-law with 3,000. If he sends it back to me, will they question that? When I get my taxes, can she use that towards a down payment? And she's asking for help in North Carolina. And I think you can help, Jose. So definitely after this call or like at the end, we will share how we can connect. But if you guys just go to homefordreamers.com, you guys will be able to fill out a form and then schedule a call with us. You'll see our calendar and either Jose or I will be able to answer. But Jose, so people can use the tax refund as down payment, correct?
Absolutely. And a lot of the times people will think that refund has to be seasoned for 2 months. And no, that's not the case with the refund, because it's coming from the IRS. You can use it day one. As long as it's available, you can use those funds for down payment. Another thing that I've been finding out a lot of the first-time home buyers may have a 401k, right, with their company. And they might not even be aware that they can tap into that to maybe use some funds for the down payment. So that's another thing that you can reach out to your administrator of the 401k and ask them, hey, I'm looking to buy a house. How can I use my money to, my own money to leverage, maybe getting a loan against my own money for me to buy a house. A lot of the times you'll find out that they'll let you use, depending on how much money you have, up to 60% of what you have there. And they'll give you some terms about maybe 5 years repayment with a very low interest rate. But that can help you buy the house that you've been wanting instead of waiting, to save. So
yeah,
that's another thing that you can use.
Yeah, guys. So very important. These are just some simple like ways or like hacks, if you want to call it, to make sure that you can get to the down payment faster. So you can also ask the seller. So when you're getting a loan, you have the down payment and then some closing cost. So depending in where your market is, because right now in Austin, there's no way you're going to get the seller to pay for closing costs.
I think that's in
But
all everywhere right now.
that's everywhere right now.
Markets,
Yeah. I
yeah.
mean, yeah. So from that perspective, you can sometimes you can get the seller to pay for closing costs, and or you can also put it into the loan depending if the home is going to appraise. Now, you have to take that into consideration, because sometimes, let's say that you do get a home, putting down 5% down is worth 300. You might have 15K, but you also need I would say have 20 just in case for like the down payment and the closing cost. But if you use, let's say your parents can give you a gift of a couple of $1,000, and then you can use your 401k, right? And the best part, if you've already invested and you've been with a company forever and they're matching your 401k, it's like free money, right? So you can use 60% or 50%. It all depends on your work, but you can use a 401k. Especially if you're going to be using house hacking, like if you're going to be buying a duplex or something, if you can, like, if you want to be financially independent in your 20s or 30s, which I know all of us can be, you're not going to just get there by maxing out your 401k. Maxing out your 401k is great, but building passive income in our 20s and 30s is where it's at. So highly recommend it. I'm very passionate about that. So yeah. So use all those little hacks right now. Jose, question for you here, and I'm going to put you on the spot because I don't know this, but I usually share about this. Let's say that somebody does Uber for 3 months so that they can save for their down payment. Can you use that income, for example, that now I've been Ubering and I make an extra, let's say 300, like $1,000 a month, and I can show, hey, I've been using Uber, and I have an extra 3,000 in my bank account coming in. It may not show that I'm working there, so it's not going to approve me for a higher loan, but I can use that income, correct?
Correct. Yeah. So the key right here is like, as long as you can document the source of the source of the deposits that you put in the bank, that's fine, because you can tell the underwriter, I'm not trying to use any income from the Uber, because you need to have 2 years of Schedule C showing that you've been doing that for 2 years. I'm not using any income, but this is income that is coming from a legitimate source. So you can use it. That's fine, because that's in a way payroll, right? So that's totally fine. You can use it.
Yeah, exactly. Now, regarding the down payment, regarding down payment assistance in your state, it would really depend on your county and also your state, and it goes by your income. So for example, there is something here in Austin called MCC credit, and it can only be used in like Williamson County, and you must not be making like more than 80,000 a year or something like that. So there are possibilities for down payment assistance, but it's more dependent on your state or on your county. So keep that in
Correct.
mind. There's also like, if you're a teacher, right, Jose, if you're a teacher or something, there might be ways that you can get down payment assistance.
Correct. Here are the nuances with that, because the down payment assistance, you got to remember, it comes from different entities, right? It could be College FA, GSFA, NOAA, the city. It all comes down to their guidelines. So now the lender is depending on the guidelines of that entity that is giving you that money, right? Or in some cases, you had to repay it, right? Taking as an example the MCC. The MCC, what it is a mortgage credit certificate, right? So what it is like, I haven't done one in years, right? But I used to do them a lot, where you implement that mortgage credit certificate, right, for the buyer to get some credit at the end of the year when they do their taxes. They will get about 20% of the mortgage interest that they're paying on that house back through the refund, right? here's the thing that you got to watch out for, especially if you're in a high income bracket level. If 2-3 years down the road, your income triples or doubles, and now you were making maybe, first you were making about 50 to 60,000. Now you're making maybe 130 or 150. They can come back and reclaim that. So just be aware for that. The IRS can say, okay, now you use this, but because of the fact that now you're making more money and you haven't gone over I think they give you about 5 years, and now they can go ahead and say, okay, through the taxes, instead of now you're getting money, that they take that back. So make sure you read all the fine print when you're taking the mortgage credit certificate, if you're up there on your income. That's what I'm saying.
There's I know there's somebody named iPhone who raised their hand. I don't know if you have a question or if there's something that you want to share, but okay, cool.
If I may,
Yeah.
Diego.
I'm
So,
sorry.
go ahead.
I'm sorry. I came in late at the chat and I completely forgot to put my name, but my name is Marisol. And
Marisol.
I have a quick question. So I don't know if you guys have time, but if I can explain my situation. So I'm a DACA recipient and my husband is an American citizen. We've actually tried for a home, and I knew, from the get-go, I knew that we couldn't get the FHA because of me. And from my understanding, FHA, we both have to be included, correct? Like they can't just do one person like the conventional loan?
No, you can do one person on the loan, but here's the thing that a lot of people get confused. We have to look at both of your liabilities, because that's the FHA guideline. We have to look at the credit report of the person, the spouse, right? That is not going to be on the loan, but since you're married, the FHA guidelines require that we have to look into the liabilities of the spouse to calculate our debt to income ratio. But it doesn't mean that the other person needs to be on the loan.
Okay, because we were actually in the process. We got up to the process to where we were in escrow. And so we didn't go with the FHA loan because I live in a small town in California, and there's not a lot of, actually, I don't know that anybody knows, they know how to handle DACA recipient, like any type of paperwork like that. So then I explained my situation. The lender, he had, even though he's been, over in the business for like over 30 years, he didn't really know what to do. So we proceeded with a conventional loan, and it was just under my husband's name, just because, just because we wanted, we wanted it to be like, I guess, safer and easier, just because he's a citizen. So that way there's no like hiccups or bumps on the road. So we got up to the point where we were actually in escrow, and right, we were like in the pre-approval and everything, but then the lender came back and said that it didn't go through because he had a collection from his account, but he already knew that. So I wanted to know, it wouldn't affect anything, I wasn't in the loan or anything, but that wouldn't have had nothing to do with me, would have?
No. It's just like if it's a conventional loan, they basically work with just the credit of the person that is applying for the loan. In this case was him. Yeah.
Okay.
Yeah, but I think that the issue was that even though they knew from the beginning that there was a collection that they didn't take, that they didn't, like, that's why it's super important to work with a lender that does the due diligence in the back end, to make sure that this doesn't happen. Because at some point, like it sucks, right? When you're like, you're under contract, you're like 2 weeks before closing, and they're like, hey, there's a collection. And you're like, dude, I told you 3 months ago.
Yeah,
right?
and the thing is that collection was paid off, so we were so confused. But then again, I think it was just some people make it seem like it's easier to get a home, but I feel like in our situation it was so hard because we tried with me first with conventional only, but there was a stop because I don't know if you have to have certain knowledge up to like a certain extent so you can go ahead and keep on going for DACA recipients. So we had to stop from my end.
For
So
sure.
then that's why we continue with my husband. And then that happened. And I mean, like I said, yeah, it sucks. You know, we had the home picked out, like everything was ready. And then
Yeah.
it just
May,
fell
may,
through.
may I ask why did you guys stop with you? Just because you were DACA recipients? They find out they couldn't do the loan for the DACA recipient, or?
No, so I had explained to him that we couldn't do FHA loan. And he was sure that we were, but you know, like I for sure knew that I couldn't. And so we went up with a conventional loan. He went through the paperwork, and I don't know if he didn't know how to proceed any further, because I was actually his first DACA recipient. And I guess on his end, he said that he tried, you know, to do, I guess, everything to help me. And then he also tried to get me, you know, like first time home buyers, but that's what we went with, conventional, you know, so we didn't have to get all that. But the point is, I guess at the end of the day, he just said it was easier if we tried it with my husband. So I don't know what went on there.
Got it. Got
Yeah.
it. Well, I would say, so if you do want to chat a little bit more about this, definitely go to homefordreamers.com and schedule a call with us, for sure.
Okay.
For sure. Yeah, that way we can hear more. And like, if you're still in the process or something, I've gotten a lot of calls from people that's like, hey, Diego, I'm under contract, and then my lender said no. So I look up for Home for Dreamers on Google, and then your website came out, and then Jose has saved the deal. So, so it's super important to be able to work with the right team. And that's why I put this together. So then this brings me to the next thing, guys. When you're buying a home right now, it's taking between 30 to 40 days to close on a loan. Is that right, Jose? 30 to 40 days to close?
30 to 45 days. I
45
personally
days.
been closing my escrows 30 days.
30
So
days,
it's,
yeah.
17 days loan approval contingency, 14 days appraisal contingency, and close of escrow 30 days.
Yeah. Yeah. So within 30 days. So what does this mean, guys? It's super important to know that if you start the process today, let's say it's January 24th, and you really want to get a house like ASAP, let's say it takes a week or two to get qualified. It can be a lot shorter, but if the lender says, hey, I need these documents, and then you're super slow, it will take longer. But if you can get qualified in a week or 2 weeks, that puts us into February. Let's say that it takes you a week to find a home. You're looking mid-February, you will more than likely close mid-March to end of March, right? And the cool part here, though, is that your first mortgage payment is not going to be till May. So you skip April. And from there, by skipping April, like some people may think, oh, I'm going to buy later because of my lease. But if your lease is expiring later, you only are paying just like one at one place. So you basically don't have to pay a mortgage payment. If you close mid-March, you don't pay the last 2 weeks in March and all of April. Your first payment is due in May. So that would really help. Just as a way to educate you guys here. And yeah, guys, so we can, because I'm seeing some of the messages here. We can definitely help. Just go to the website, and then if you guys do need help with credit, go to mycreditwipe.com. I'm gonna put the link here if you guys do need help with your credit. mycreditwipe.com. And Felipe, who's a buddy of mine, he will be able to help you out with that as well. You'll schedule a call with him, and yeah, just helping the community. So
Diego, a lot of the times what I've been finding out is that there are some people that they have everything ready to go, right? They qualify, but they wonder, oh, you know what? My lease contract is up in about maybe 6 months. What do I do? So I always recommend them, you know what? Call the landlord, ask him what the penalty is to get out of the contract. Because if you wait maybe until maybe 8 months from now to try to get out of the contract, and then the rates go up, you're probably going to end up paying more money. But it's just wise to find out, hey, what will be the prepayment penalty if I get out of the contract? So you don't feel tied, and just wait. Because if you have everything ready and you want to buy, don't delay just because you're in a contract. Find out first what the penalty is, because a lot of the times will be maybe just one payment or two payments. But just like Diego say, when you buy a house, say for example your mortgage closes in March, your payment is never going to be due the next month. Like just say April, it's going to be due in May. So it kind of like compensate maybe for the prepayment that you're paying for that to get out of that mortgage. But now you have a house.
Yeah. And always, I would say it doesn't hurt to ask. I mean, you never know if you're renting a house and then all of a sudden, like you still have 6 months left, but you never know if that landlord, if he has a family member that's looking for a house and he's like, hey, I don't want to buy there, my tenant, but as soon as the 6 months is over, I'll let them know that I'm not going to renew. And so it doesn't hurt to just ask them and see where they are at. So, which brings me to the next point that I wanted to share. And this was a conversation that I had often while we were in the Trump administration. Now with Biden, it's a little bit different. I feel like there's more hope. But with the previous administration, there was always, hey, what would happen if I if I buy a home and then DACA happened, like DACA gets taken away? And I'm like, well, if DACA gets taken away, you're still going to pay rent somewhere. Like you're still paying the landlord's mortgage. So you're either going to pay your mortgage or the landlord's mortgage. And it's up to you to choose. Right. And then there's always things that we can do to get creative. Like if we made it a long time being undocumented and stuff, if we have to go back, we can continue with our creativity. Right. So that's the one thing that I say.
This is the way I look at it, Diego. Also, like, say, for example, something happens with a lot of people also get nervous about, oh man, what happens if maybe I don't keep the job later on, or they start getting those negative thoughts get in their head, right? But I was telling them, anywhere you're gonna live, you're gonna end up paying rent anyway. So 2 or 3 years down the road, if you're really going through maybe something really stressful and you can't pay the mortgage, just sell the house, right? And then you have equity there instead of,
Sorry, I was on mute. Yeah, guys, I'm just gonna share. There's a Juanito, you raise your hand. If it's something personal, definitely contact us. If it's a question regarding loans and stuff, feel free to unmute yourself. But I just want to respect everybody's time here.
What about like for like hospital bills? Does that affect, if we want to buy a home? I don't know if they send us to collections, or, I mean, would that impact our, home buying process?
That would be a question for Jose.
So if you have medical bills and they're not over 5,000, FHA and conventional loans will allow you not to. Will say, okay, you don't have to pay them to get the loan, but you have to meet the other requirements, which is the FICO score. A lot of the times the collections affects your FICO score, and if your FICO score is below 580, then you have to wait somehow until the FICO score goes up. So then you have to get somebody like Diego was mentioning, a credit repair guy who can help you out, maybe get your credit up there. But in regards to get the loan approval, if your FICO score is still maybe where it needs to be to work on the loan, 580 and above, and if the collections are not more than 5,000, you can still get a loan. If they're not medical and they're, maybe about 4,000 collections, then the underwriters will say, yeah, you get a loan, but you have to pay them at closing. That's the tricky part. But medical collections, they'll allow you to, as long as they're not exceeding 5,000, not to pay them in order for you to get a loan. But the credit needs to be meeting the guidelines. 580 for an app for FHA, 620 and up for a conventional.
Yeah. And same for repos, I owe like 9,000.
on a repo.
But maybe giving you a number, like maybe, like Does that same thing? Does that fall in that same category as a medical? You know, or
No, if it's a collection of a different nature other than medical, if it's more than 5,000, or even if it's 4,000 or 3,000, the underwriters will ask you to pay that off before you get the loan approval. Medical collections, they fall under a different category though. I don't know if this makes sense to you.
Cool. Well, guys, I know it's 9:24. We started at 8. It's probably like 10:30 for some people if they're in the in the East Coast in Florida. I'm just gonna share my screen here for some links so that you guys can be able to contact us. It's just picture me. Just if you guys want to check out my TEDx talk, definitely check it out. It's called "Can the American Dream Be Achieved When You're Not American?" You share a little bit about my DACA story, some of the challenges that all of you guys will definitely relate, just because we all have the same story. If you guys are definitely interested in scheduling a call with us, homefordreamers.com. One of my passions. So I am a realtor, but I'm super passionate about teaching the financial independence stuff. So Rat Race to FI is what, if you follow me on Instagram, you'll see a lot of this. My IG is Real Diego Corzo. And for any of you guys that do want some help with their credit, go to mycreditwipe.com. And my buddy Felipe will be able to jump on a call with you, walk you a little bit through the process and help you out so that you can increase your credit if you guys are interested in hopefully qualifying for conventional loans if FHA doesn't work, because at the end of the day it's options, and that's what something that we have now, which I think is great. So I'm going to leave this on for a little bit here so that people can check out the links: homefordreamers.com, mycreditwipe.com, and Rat Race to FI if you guys are interested in learning more about financial independence. So yeah.
Awesome.
Cool, guys. Well, I am gonna stop sharing this just so that you guys can definitely do this, and then I'll stay for another 4 minutes to answer people's questions and go from there. Anybody, feel free to unmute yourself if it's more related to everything question, and just for 4 more minutes.
I have another question. It's Marisol again.
Hi, Marisol.
So with the FHA loan, I know, going back to it, I'm sorry, I came in late, so I don't know if you guys went through this. But you know, like again, for residents or citizens, they can go ahead and apply for like first-time home buyers and down payment assistance and all that stuff. Does that mean that we qualify for that as well now that we're allowed to get the FHA loan?
It really depends on your state and in your county, in your city, and depending on what you do. Because if there's some regulations that they do require a green card or a citizenship, then you may not be able to qualify.
Okay. And then another question regarding that. All that help, is that pretty much, because you know, I've heard and all, but I've never verified. Is that like another loan behind your 30-year mortgage? And then do you have to pay all that back because they're still considered loans?
It depends if it's a grant, or it depends if it's a, like, it really depends how it's structured. And you want to make sure that you are really educated on that, because some people and also like some lenders will tell you, hey, we will cover your credit, we will cover your closing costs, but we will pay for part of your closing costs, but they tack it on your interest rate. So you can definitely get some credits, but they tack it on your interest rate. So you have to make sure that you are aware of everything that's going on so that there's no surprises. Okay. And yeah, so highly recommend that. Jose, anything you might want to share?
Correct. So for example, a lot of the times when you're showing money and you can't, and maybe you need like that extra $3,000 or $4,000 to try to help you close the transaction, and there's no more funds, right? The lender will give you an option to say, it's called choose credit for chosen rate, right? So the lender will say, okay, Mr. Customer, if you qualify for, I'm just gonna make up numbers, right? You qualify for 3%, paying your own closing costs and all that. But if you don't, if you don't have the means to come up with these funds, we might be able to get you a 4% or 3.8, depending on how the rate looks like that day, and you get 4,000 or 5,000 credit for closing costs. So in a way, you are choosing to get a higher rate in exchange for the lender to pay for your closing costs. So, you know, as they say out there, there's no free lunch, right? So,
Yeah.
but as long as you are informed, I think that's what it comes down to. Because it's not a bad thing when you decide that you want to take that route because you have no other way to get the loan done, right? Get the house. But you have to be informed that it was an informed decision. So the lender will have to let you know, you can get credit, but you're just going to take a slightly higher rate. And this is what the payment is going to be so that you can make a congruent decision. So it's bad when the lender tells you, like you were saying, oh, we'll give you all the credit for closing costs, and they don't disclose all of that to you. I always believe that the more information you provide to the borrower so they can make a wise decision, the better, right? So it's a choice that you have, but just be advised that is because of the fact that you are choosing a higher rate. So then you're gonna compare the payments. Okay, if I come up with my own money, what the payment's going to be versus if I take this higher rate and have the lender pay for this cost, now what the payment's going to be, it's going to be slightly higher. So, but
Okay.
yeah.
Okay, that makes sense because, like I said, I've heard coworkers when they're like, I've only needed like $1,000, $2,000 to get a home, and I'm like, what? How? How do you do that? But that makes sense. Thank you for explaining that.
You're welcome. Yeah.
Yeah. Cool, guys. And anybody, so on the buying side, again, just to reiterate, make sure that you're working with a DACA-friendly realtor and a DACA-friendly lender so that there's no surprises. The closing usually takes about 30 to 35 days. I'm here to help answer questions. Jose is here to help, and we have connections too all over the US. So we are here to help the DACA community. And anybody have any last minute questions or any questions regarding financial independence, money, mindset, anything? Of course, real estate is great. But anybody have any questions on that so that I can help, because that's what I'm
Diego?
passionate about too.
Sorry, Diego.
Yes.
I you live in San Antonio. Sorry. I mean, I know you live in Austin. I live in San Antonio. My bad.
Cool.
And can I go visit you, or is it always better to do it over the phone? Or
Well, I mean, it depends, right? Like, do you just want to like chat and connect, or you want to like talk, like, because like we can get coffee if you want to come here. We can get lunch one day. I'll be
yeah, no,
totally
I
down
mean,
to do that.
goals to buy a home, and taxes are coming up, and I got a good refund. I mean, I want to use that towards, and instead of spending it somewhere else,
Yeah.
I just moved from California to San Antonio recently, and
Okay.
I don't want to, and I've been seeing your emails, and I want to get a head start. I want to put my foot on the door, and eventually buy a home in Texas.
Yeah, for sure. Well, I can definitely connect you if you're in San Antonio, I can connect you to, there's a realtor, Alejandra, and her husband. They're really, really good. She is awesome. They also invest. So it's
I mean, as
really
long as you,
good.
I mean, if coming from a perspective that you're a DACA recipient, I'm a DACA recipient, I'm going to be truth with you. You're willing to help out, and I'm willing to accept that, that you're going to help me out. I
Cool.
mean, you recommend me to somebody, in San Antonio, I really appreciate that.
Oh, you're welcome.
But
For sure.
yeah, I mean, I've emailed you and you emailed me back, but I mean, I'll email you again.
Yeah, please do. Just in case. Yeah. And send me a message on Instagram. I respond pretty well there. So I'm
Yeah,
just
I
gonna
don't
put
got
it
it.
here.
Facebook, no,
Okay.
marriage.
Send me an email again, just in case. Yeah. And
Okay.
and if you come up to town, we can definitely meet up.
All right. Thank you.
Hey, Ray. Oh, yeah, Ray. I do remember. I met you when I was in, I went to speak Staten Island. That was the first time that I was invited to speak, to like share my story, and it was freaking awesome. Medical
That was a
bill.
long time ago.
Yeah, that was what, like that was
2014?
December 2017.
2017. Yeah. It's been a
Yeah.
while.
Yeah. Because I shared my story when Trump did that in September 16th. And yeah, was it September 15th, September 16th? Always remember that day because it sucked.
Wow, you have a good
Um,
memory. Take
yeah.
care.
All right.
I
Yeah,
just had a
guys,
quick
cool.
question.
Yeah.
Sorry. Hi. Jose, I just wanted to ask you, do you have any partners here in New York that you recommend that are DACA friendly, since you can't help out in New York or practice here?
Jose,
Oh, is
so
that a question for me? Sorry.
yeah, if
Sorry.
you had a lender in New York, if not, I have a lender too that I can connect you with in New York.
Okay,
Yeah.
I appreciate that. Thank you.
Yeah, yeah. We unfortunately we are working on getting the license in New York, but specifically knowing somebody there in New York that is licensed there to help you. I think Diego will be definitely connecting you with one. Once we are licensed in New York, though, I'll let you know, Diego.
Yeah, please do, guys. Yeah, because we can help, or like Jose can help in all 40, well, in 48 states. And it took me a while to find a lender too that can like at the beginning, back in 2017, when things were like not happening, DACA, nobody knew what was going to happen with DACA. There were a lot of lenders that just pulled out and they're like, hey, we're not going to do DACA loans at all. And then I almost gave up, but I was like, no, there has to be a way. So then I connected with Jose, a few other ones. And yeah, so yeah, there's somebody that raised their question. Huh?
We've been helping out a lot of DACA recipients, and it's, you know what, too,
Yeah.
it's an amazing feeling to be able to know that somebody got their house because you were able to help them. So that's awesome.
Yeah, it's awesome. Leonardo, you had a question?
Yes, Diego. So I had a question for you. How possible is it to do a dual career? So right now I just graduated like this past June with the degree in mechanical engineering. So I want to do a dual career, like a part-time realtor, and still have my my full-time job. How possible do you think that is?
It's totally doable. If you want to create either some like if you're gonna climb the corporate ladder with your job, then it might be a little bit harder because like as an engineer, you might need to like get some other certifications and stuff like that. But if you're doing it part-time, showing like working nights and weekends is doable. Yeah. I did it like that part-time for a year and a half before I went full-time in real estate.
Okay.
Yeah. 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 And then I started slow, right? Like the first year I sold like 5 or 6 homes, then I sold 11 and 24. Yeah. Last year I did 56. So
Oh,
it
wow.
was a freaking busy year, but it was good.
All right.
It was good.
Thanks for the feedback.
Yeah. Yeah, for sure. And one of the good things about that too, Leonardo, if you're working with engineers, they're making good income. So like if you can be known as like the realtor from their job or whatever, then that can definitely help. You can use your sphere of influence, which is how I got started, right? I bought my first house and then I began to tell all my friends, dude, I did it. It's awesome. And they're like, can you help me? And then boom, 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 boom. It
Right.
went from there. Yeah.
Awesome. Thanks.
Yeah, for sure. Who else has some questions? I like talking about like all of this stuff. So I mentor
Fascinating.
around 70. I mentor around 70 people right now on like people that are wanting to get started investing in real estate, not just like buy their first house, but like investing. And it's really cool. It's really cool because
It's really
a lot
awesome.
of people are DACA recipients. They're millennials, minority, which is what I feel is like it's what is it called, like unrepresented, or like like
Underserved.
there's not that underserved.
Underserved.
Exactly.
Yeah.
Yeah. There's not that many people that are actually like that have somebody to identify with and connect. So are there any yearly fees for realtors? Yes. So if you want to be a realtor, it really depends on your state. For example, here in Texas, we pay $1,400 a year, $400 a quarter or something for MLS access. So yeah. But Jose, I want to respect your time too. Jose, thank you so much for your time. Really appreciate it. And everybody here, I will, Jose, if you want to log off or anything, feel free. But Jose, so if people, what will be the best way for people to reach out to you? Do you want to just do it through Home for Dreamers, or you want them, can you share your email, your phone number, your website, whatever?
You can share my phone number, my email, but the best way I think is using your platform, right? Home for Dreamers, because we are connected, and we want to make sure that we take care of you. Diego, you have been doing an amazing job, man, and great respect for you for what you're doing. I mean, when you look back, maybe 10 years from now, you see the people that you're mentoring being successful. I'm sure that's going to be so gratifying, for your soul. So I appreciate you and your time too. And homefordreamers.com will be the best way that you can reach out to me. However, if you like to reach out to me directly, 714-875-3874. That's my phone number.
Can you say that one more time? I'm going to put it here on the chat.
Okay, it's at 714.
Okay.
875-3874.
Okay.
That's my cell phone number.
Cool.
And
I'm just going to put here your name, your email, Jose Sauno Lender.
And anytime you have a question, you want to know where you're standing on regards to qualifying for the loan, it's very important, to identify where you are. If you're ready, we'll get you ready. I want to make sure that Diego would always be on the loop about what's going on with you. We want to make sure that we take really good care of you. And so we do things right with Diego. We make sure that you don't fall out of escrow. We do everything, all the work up front. So once we identify you're pre-approved, we'll connect you with somebody that Diego knows, and make sure that you are taken care of, so you can get into that house. But feel free to call me, text me if I can't answer the time, because a lot of the times I'm on the call during the day, during the week. It gets crazy sometimes with the volume of calls that we're getting. But I will get back. I will get back to you if you text me. But like I said, using the homefordreamers.com is awesome, because that way we can have your info there and try to synchronize some time, for an appointment to talk and help you out that way. Thank you, guys. I hope the info that I provided to you didn't bore you. I'm just excited that now we have options again to be able to give you an option for an FHA loan. And then if that fits your needs, that'll be great. If the conventional fits your needs, that'll be awesome. Both programs are great. You just have more options now, which is amazing. Diego, thanks so much, man. And we'll be in touch. Hopefully we'll do this more often. I really appreciate it, and I really enjoy it.
Yeah, same here. Same here. And I know that Diana, I think it was Diana or Ruby had a question. Can you use departure income if you were house hacking and renting by the room? What would you need? So if you put everybody in a lease, you can just use that, right? That's how I did it.
Correct.
Yeah. You just put everybody on a lease and just say, hey, because the bank just needs a lease. So just give them a lease and you're good to go.
Exactly. To avoid, any more questions and nuances like that. I'd be more than glad to doing one-on-one and let you know how will be the best way to do it once you're ready. One quick phone call, and we'll get you started with that.
Yeah. Cool. Well, guys,
Thank you,
I gotta
Diego.
go. Thank you so much, Jose. Really appreciate your help. And guys, like I said, here to help the community. Anything that anybody had any questions, we're here to help. If I take sometimes a little bit to respond, just send me another email, just in case, so that I don't miss anybody, and we'll go from there.
Awesome. Thank you, Diego. Appreciate you,
All right.
and appreciate
Bye.
all of you guys. Thank you for your time.
Yeah. Bye-bye, guys.
Goodbye.